fact, we did speak to Satyen Mamtora, Managing Director of the company, about how does the acquisition actually benefit the company. When are they seeing, revenue start flowing in? Let's listen in to that conversation.
So this is a major milestone for our company, as CRGO contributes to 30% of our raw material. With this, not only will we be able to expedite our own production for transformers, we will also be able to sell this the remaining excess capacity of the CRGO production unit in the market. We have been in talks with several companies and also some motor manufacturers for EVs, which are also showing their interest in buying their CRGO from us, cut CRGO from us.
Right. Mr. Mamtora, when you talk about the raw material part of it as well, as majority of your raw material is with regards to the acquisition that you've made, how will it benefit your margins going ahead then?
There should be a 30 BPS increase in the margins, ma'am.
Okay. So a 30 BPS increase in terms of margins is what you're seeing. Are you seeing such more acquisitions on the table, with the target to be 100% backward integrated organization by the first quarter of FY26?
We are in process of making some 3 more inorganic growths to increase our manufacturing capacity of transformers and other ancillaries also. We are expanding backward integration in tank manufacturing, wherein we will do about 4,000 tons of metal conversion per month. We are we are putting up a large plant for bushing for RIF, RIP, and OIP. And then we are also putting up a insulation plant, which will help us in increasing the deliveries of transformers.
Okay. So with all of this, in terms of the acquisitions that you're looking at, how are you funding all of these acquisitions, and what's the end benefit that you're expected to see?
So the end benefit, we want to cross, or we want to touch 3,500 crores or $1 billion in the next 3 years. So all this backward integration will help us not only supplying transformers to various EPCs and power grid and such like, but also to other transformer manufacturers and motor manufacturers in the country.
Okay. An interesting point you made is a revenue of 3,500 odd crores, which you've already mentioned earlier. In 26, 8,400 odd crores in the next 3 years. So you're almost looking at a 75 to 80% revenue CAGR for the next 3 years. What is it that is actually leading this strong growth? Where is the demand coming from?
So the demand is coming from, Indian EPCs, Indian electricity boards, Indian national grids. The demand is coming from Europe. The demand is coming from Africa. The demand is coming from US. So world over, with this solar that is coming in, there is a huge demand for these transformers.
Okay. And is this more from the international waters, or is it from the domestic market alone? Because you're planning to increase your exports as well, which currently stand at 10%.
So 75% of whatever we have taken a conscious decision that 75% of whatever we produce will be given to the Indian market. Rest 25% we will allocate to different markets in Europe and US.
Okay. So with regards to the remainder 25%, currently it stands at around 10%. Which are the markets that will lead it to 25%? What is the target? And will that have a direct impact on the operations from a margin perspective?
The margin perspective, there should be some benefit for us. Plus, we will get some benefits because of the export benefits that we will get as a manufacturing unit. Otherwise, there is no margin benefit as such. major markets that we are targeting right now is US and Europe. Europe is coming out with a large, not as large as India, but they are coming up with about a 350 megawatt solar project in Austria and in Germany, which we are targeting currently.
Okay. And where does the current order book stand? Any updates with regards to beyond 3,500 odd crores? Because clearly, you know, the order inflow pipeline seems to be absolutely strong for you from the domestic as well as the international markets. So what is the execution timeline and what is the additional order book that you're expected to see in the second half of the year?
We normally have a hit rate of 20% in terms of every tender that we've quoted. So we are expecting a huge order book in the coming last quarter of this year. But the current order book stands at 3,500 crores.
Okay. And with regards to where the first phase of the fabrication unit goes, which is expected to be operational by March 25, when is the capacity utilization to be, what is the capacity utilization expected to be at start, and how much of the revenues will be driven by this?
So mostly there will be some teething problems once we put up the plant, but we have been manufacturing tanks for a long time. So we are aware of what the teething problems are. So at initial stage for the first 6 months, we can look at a capacity utilization of 60 to 80%. And after 6 months, we should be at 100% full steam.
Okay. And how much revenue contribution will come in from there?
I see most of this 4,000 tons that we are going to manufacture for fabrication would be consumed by us ourselves. We will have to look at how we can expand there and sell in the international market.
Right. And lastly, Mr. Mamtora, any key comments with regards to where investors go?
Investors have, we are doing very good. We are investing at the right places. We are putting up the right units, which will help us not only increase our production in terms of transformers, but also increase our the company's turnover, which will help the investors very much.